If your dream is to create a wealth of 29.39 crores by investing 6,000 SIP per month and then generate a fixed monthly income of 1 lakh for a lifetime, then this video is for you. Welcome to CoachFin. I am Nilesh Bodhi and let's see how we can generate a wealth of 29.39 crores. So today we are going to see about ICICI Prudential Nifty Next 50 Index. Okay, this is a index fund. Index funds are passive mutual funds that mimic popular market indices. Index funds are ideal for long-term investments. Okay, so this fund was launched on 25th of June 2010. It is an equity index fund. The NAV of this fund is 33.99. The AUM is 2089.70 crores. There is no lock-in period in this particular fund. There is no exit load in this fund. The expense ratio is very less, which is 0.3%. But as per riskometer, this is a very high risk fund. Okay, the minimum SIP is 100 and the minimum lump sum which you can start with this fund is rupees 100 only. If you see the 1 year returns, the returns are minus 4.96, that is negative returns. If you see the 3 year returns, the returns is 11.27%. In 5 years, it has generated the returns of 7.31. And if you see the inception returns, that is since the time when the fund has been started, it has given the returns of 12.65%. If we see the allocation by market cap, then this fund is investing 78.61% in large cap, 21.36% in mid cap and 0% in small cap. If we see the allocation by sector, then this fund is investing 16.79% in services sector, 12.93% in consumer staples, 12.63% in financial sector and 8.46% in capital goods. If we see the top stock holdings, then we can see that they are investing 5.47% in Adani Enterprises Limited, 3.70% in Adani Green Energy, 3.37% in Avenue Supermarts, which is also known as D-Mart, and 3.29% in SRF Limited. Now, if we see the downside protection, then just consider the data on the right hand side, which is the absolute returns and the category average. We can very clearly see that for a 1 month period where the category average is giving minus 0.62% return, this fund is giving minus 1.29%. In 3 month period where category average is giving minus 5.36%, this is given minus 6.30%. In 6 months in YTD until 1 year, we can very clearly see where the category average is giving minus 8.26, 8.76 and minus 2.34. This fund is giving comparatively minus 12.68%, minus 12.13 and minus 5.39% return. So if we see the downside protection, then we very clearly see that till 1 year period, if the market is falling, then these funds fall more when compared to the market. Just understand that this is an index fund, so the returns which you will get will be with comparison to the index return. But if we consider for longer period, that is more than a year, that is 2 year, 3 year, 5 year, and since inception, we see that this fund is giving a return which is really comparable with the index, and sometimes it has also gone beyond that particular period, right? So there are basically 3 reasons why we invest in any index fund. First is broad diversification. The most obvious benefit of investing in index fund is that your portfolio becomes instantly diversified, minimizing the likelihood of losing some or all of your money. Second is a lower cost. Another major benefit of investing in index fund is that the costs, including the taxes and the management fees, may be lower than those associated with other types of investment funds. Okay, and third is the attractive returns. Individual companies both outperform and underperform the market, but in general the overall stock market increases in value over time. As a result, index funds yield generally higher returns or for a low cost, which makes them an excellent value for any investor. So if we keep on investing in index fund, that would really help us, but for a longer period. If your target is to invest for 1, 2 or 3 years, then please don't consider index fund. If your goal is a bigger goal, like child's education or marriage or retirement, then you have to consider index fund, because over a period of time, in a long run, it will give very good returns. Let us now see the fund performance. So for getting the fund performance, we will check 4 parameters. So the first one is standard deviation. Now this parameter, it gives an idea about how volatile the fund returns has been in the past 3 years. Higher the standard deviation, higher is the volatility of the fund. Okay. The second parameter is beta. Beta gives an idea about how volatile the fund performance has been compared to similar funds in the market. A beta greater than 1 indicates a stock price is more volatile than the overall market. A beta less than 1 indicates that a stock price is less volatile than the overall market. Whereas a beta of 1 indicates that the stock is moving identical to the overall market. The third parameter is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means the fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. And the last parameter is alpha. Alpha indicates how the fund has generated additional returns compared to the benchmark. Remember, higher the beta, lower is the alpha and vice versa. Standard deviation and beta must be as low as possible, whereas Sharpe ratio and alpha must be as high as possible. Here in this case, we can see standard deviation, beta, alpha, they all are less. Only the parameter which is high is Sharpe ratio, and which is very good. Okay, rest all parameters are not that much good. Okay, now if we see the comparison of this fund with the benchmark, we can see that it is moving identical to the benchmark. There were times when it was below. For example, if you see just before 2012 till 2014, it was below the borderline, and that means below the index. Whereas it is moving very identical from 2014 to 2016 to the market. Okay, but from 2016 till 2018 of mid, it is moving beyond the index, means it is going beyond the index to give us the returns. Whereas again from 2019, if we see, it is again going with the index. So we can't expect that this fund will overperform the index because it is following the index. So it has to be with the index. That is the main important part in this. When we consider index fund, we consider index fund because we don't want to take much more risk and we want to play safe over a period of time. That's the reason we will consider an investment of 10 years. And the most important part in any index fund is that it is having very less expense ratio, which is a plus point. So you save in the longer time. Okay. So now if we invest rupees 6,000 per month SIP in this fund, where it has given 12% return till now, so we will consider that this fund will give 12% returns for the next 30 years. Okay, since being an index fund, an index fund normally gives a return between 12 to 14%. That's what we have seen over a period of time since the market has been started in 70s. Okay, so let us consider that we are expecting 12% returns from this fund and we are investing 6,000 per month in SIP. So what will happen in that particular situation? So for 5 years, we'll be investing 3,60,000. The estimated returns would be 1,34,918 and the total of invested plus estimated amount would be 4,94,918. For 10 years, we will be investing 7,20,000. Estimated returns would be 6,74,034, whereas the total would be 13,94,034. In 15 years, our investment would be 10,80,000. The estimated returns would be 19,47,456 and the total would be 30,27,456. For 20 years, the invested amount would be 14,40,000. The estimated returns would be 45,54,888, whereas the total would be 59,94,888. For 25 years, the invested amount would be 18 lakhs. The estimated returns would be 95,85,811 and the total would be 1,13,85,811. For 30 years, the invested amount would be 21,60,000. The estimated returns would be 1,90,19,483 and the total including the invested plus estimated amount would be 2,11,79,483. So if we invest 6,000 SIP for the next 30 years with the expected returns of 12%, we would generate an corpus of 2,11,17,483. Okay, that's great. So now what we will do is we will reinvest these 2 crores into an SWP. Okay, so that we can generate a fixed monthly income. So let's see what happens if we convert these 2 crores into an SWP. But before that, I just want to tell you one thing, that Asset Plus is a platform where you can go and open your free lifetime account for doing your mutual fund SIPs, FDs and NPS account. It is a growing platform and it is a platform where you don't have to pay anything. It is totally free for lifetime. So please consider opening your account, free lifetime account in this Asset Plus link which I have given in the description. Okay, let's see now what happens with the SWP. So now we are reinvesting 2 crores into SWP, and out of which we are taking 1 lakh per month. So for 5 years, the invested amount would be 2 crores, withdrawal would be 60 lakhs, and the total would be 2 crore 72 lakh 12,707. For 10 years, invested amount is 2 crore, withdrawal would be 1 crore and 20 lakhs, and the total would be 3 crores 99 lakh 23,960. For 15 years, the invested amount is 2 crores, withdrawal would be 1 crore 80 lakhs, and the total would be 6 crores 23 lakh 25,532. For 20 years, the invested amount is 2 crores, withdrawal is 2 crores 40 lakhs, and the total is 10 crores 18 lakh 4,756. For 25 years, the invested amount is 2 crores, withdrawal is 3 crores, the total would be 17 crores 13 lakh 80,637. And for 30 years, the invested amount would be 2 crores, the withdrawal would be 3 crores 60 lakhs, and the total would be 29 crores 39 lakhs 97,114. So, if we reinvest the corpus of 2 crore into SWP and we take a monthly income of 1 lakh, then we could generate a corpus of 29.39 crore. Remember one thing, the longer you stay invested, you will generate longer corpus. Now, if you invest for, if you are not withdrawing after 30 years also, and if you stay invested for next 40 or 50 years, you can imagine the corpus, because it is growing, it is a compounded growth every year, right? Okay. Please consider joining our Telegram channel for updates on mutual fund, investment, financial growth, and creating wealth in the long term. The link is given in the description. Mutual fund investment are subject to market risk. Past success does not guarantee future performance. If you want me to be your mutual fund distributor for achieving your goals like buying a car, home, children's education, international holiday, retirement, business, etc., then please fill your data by clicking on the link given in the description, and we will contact you soon. If you like this video, then please make sure that you subscribe to our YouTube channel and hit the bell icon next to the subscribe button for such amazing content. For Hindi viewers, this video is uploaded in Hindi in our Hindi channel, and the link is available in the description. That's all for now. See you in the next video. Till then, take care.